Hello, everyone, and welcome to our monthly webinar. My name is Justin Cooper. I'm a hard money lender, full-time real estate investor, coach, and consultant. And each month we bring in some of our friends in the industry to share their expertise. Now, this may be through a presentation, like when we talk about self-directed IRAs or title insurance, or we may simply interview our expert friends and dive deep into how they got started, where their investing has taken them, and what they see coming both for themselves and for the industry. I want to say thank you to everyone who made it to tonight's event. We know that you're giving up some of your time, so Terrence and I are going to do everything we can to bring you the value that you're hoping for. Now, this webinar is brought to you by Pine Financial Group. Pine Financial is Colorado and Minnesota's premier hard money lender. Pine focuses on the needs of Colorado and Minnesota real estate investors. We're investors ourselves, and so we know what it takes to get deals done. Everyone at Pine Financial Group is dedicated to the success of its clients. We only experience success when our clients are succeeding. So we have a habit of telling you when a deal should or should not be done. And isn't that what you want from a professional in the industry, especially someone you trust as an advisor? You will benefit from our honesty and integrity when you choose to work with us. Now, tonight's webinar brings in friend and investor Terrance Doyle. Terrance is a full-time real estate investor, developer focused strictly on multifamily, 50 to 100 plus unit apartments in Des Moines, Iowa, and the Denver metro area. Terrance co-founded Value Add Real Estate in 2015 and has since directed the growth of his managed portfolio to 15 to 20 property acquisitions each year. He brings 10 years of experience in real estate investing in 6 states with over 700 transactions. Terrance, I gave just a quick overview, but why don't you dive in, tell us a little bit more about yourself before we get into the interview.
Yeah, Justin, first of all, thanks for having me. I've enjoyed getting to know you the last couple of years and love what you guys are doing over at Pine and really enjoyed all of our conversations. So excited to be here with you and your group.
Yeah, absolutely. Well, thanks for having us or coming on with us.
Absolutely, man. Yeah, I'm looking forward to it. So I grew up in Des Moines, Iowa, in the Midwest. My mom was an immigrant from Bogota, Colombia. She came here as an exchange student. My dad was also an immigrant from Canada. I like to joke that they met in the middle. Des Moines, Iowa is basically like the middle from Bogota and Toronto. And I think that was really good for me. I had 2 parents that basically came from nothing. They had to start all over here. My mom, even still to this day, English is not her first language. We spent a lot of time traveling to Bogota growing up, which was really good. I was able to learn Spanish fluently, so I actually went to school there all through elementary and middle school. And yeah, education was a big part of our lives. I was really fortunate to have 2 parents that really cared about education and invested in us. And yeah, so I just feel like I came from a really wholesome Midwest family. I have a younger brother and a younger sister, and we're really close. And yeah, so I grew up, I played basketball pretty competitively. I was fortunate to get a college scholarship, which is what brought me to Denver. I played at Colorado Christian University. I like to say that they paid me to sit on the bench and keep the team GPA up above the NCAA threshold. So that was my role in college. I was that guy, but it was great. I built a lot of relationships, had a lot of fun, and ironically, almost every business that I've been a part of has involved one of my college teammates. So that's been something that I find interesting and ironic. When I'm talking to other people about my past and my experience, of basically everything I've done in business has been with people that I've known since college. So I just feel really fortunate and really humble and grateful to have come from a really good home and have a really good foundation. So
that's awesome. That's awesome, yeah. Man. Well, I knew you played ball, but I didn't know you rode the Pine. That's awesome. Well, so tell us more. So okay, so you came to Colorado to go to college. You were on the team. I don't know if you played on the team, but you were on the team. And so what happened after graduation? Where did you go? What did you start doing after you graduated?
Yeah. So in college, I was a junior. My roommate was graduating. He was actually getting his master's, and one of the courses he took was in franchising. And he was working at the time for a carpet cleaning company in Denver part-time. We actually all were. And he came to me in the summer and said, hey, I think we could start our own carpet cleaning franchise. And I think we could do it better than the company I'm working for, provide a better service to the franchisees, have a better product for customers, blah, blah, blah. And at the time, I had no idea what I wanted to do after college. I really just went to college to play basketball and have fun. And I just felt like I was going to figure out what to do after, which is, I think is, another rabbit hole would be talking about higher education and all the issues with that. But that was my mentality. I just felt like, well, I'll figure it out. And so in 2005, we started a company called Oxybrush Carpet Cleaning Franchise. It was based in Lakewood, Colorado. And we basically each started our own franchise. So I put my franchise in Des Moines, Iowa. I did it with my dad and my brother. And my other partner put one in the Springs, a franchise, and my other partner had Denver. The CEO and the founder had Denver. And basically for the first year, we just tried to tweak, the marketing, and we had a call center. We tried to tweak the cleaning system and all these things. So then we felt like in 2006, I graduated. We felt like we had a good model, and we started franchising. So basically I was 22 years old, had no idea what really anything in business was, profit, loss, accounting. I mean, we knew nothing. All we knew was we felt like we had a really good product. It dried in 1 hour. We felt like we had a compelling story versus the competition. The competition was like Stanley Steamer, Chem Dry. So fast forward, we sold in 2006, we sold like 30 some franchises our first year. And then the next year we sold like 60. And these are give and take like 5, this was 15 years ago. These are, a marriage, 2 kids and a marriage, it's a lot has happened since then. So, but we basically sold like roughly 120 franchises units within the first 2.5 years. And we were the fastest growing franchise in that space, and we had just completely crushed it. I just remember we would fly people in, they would hear our story, and they would write us a check for the franchise fee. And I was like, I can't believe this is happening. And then they'd pay us a royalty every month, and then we'd be on the phones hoping to be successful. And so that was my first experience in business, entrepreneurship. I ended up buying other franchise locations. So I owned like Minneapolis and all of Iowa and Des Moines. And so I had it was a great experience on supply and demand, on customer service, on, things that worked and didn't work, on managing people. We had a call center in Denver of up to 10 people that I was managing as well and helping, and people wouldn't show up. I'd be on the phones, I'd be talking to franchise owners. I mean, it was a wild ride. And so I learned a lot. So that was my first experience in business in college. So we started a company, and that was it.
So a lot of the folks that are listening in are starting their own business, right? Or they're already in their own business and wanting to start something new, which is in this case real estate investing. And so you said you started this business with some buddies with no business experience, but then all of a sudden you just skyrocketed, right? The business just exploded. So how did you get good enough to support all these franchises and people and employees and all that stuff? Like, what were you doing, obviously behind the scenes, to grow yourself and your partners to be able to grow this business and have it be a success?
Yeah, so I think looking back, and I've thought about that a lot of why, obviously there's some luck involved, but I think the things that we did well were we were all really young, we were all really close friends. So there's 3 of us, and so we were very transparent with our communication. We had really clear communication. We held each other accountable, and we had a bunch of energy. We were single. We were all in our early 20s. We lived together, and so it was kind of a unique set of circumstances where we held each other accountable. We cared about each other, and we worked really, really hard. We had a lot of energy, a lot of integrity, and we were all talented in different areas. One of the guys was really good with tech stuff. The other guy was more the visionary. He handled the money, and I was more on the relationship side. I would be on the phone every day with the franchise owners, either troubleshooting or talking to prospective franchise owners. And I think that was kind of those were the things that we did really well. And I think the other, and then I think because we were young, we were able to get over our losses pretty quickly. If something didn't work, or if there was a piece of marketing, or, I remember going through different manufacturers for the cleaning product and they weren't working, we were really quick to say, okay, this isn't working, let's try something else. And so, but I think the key to it was we were just really motivated. We all, were willing to chip in and wear multiple hats. Like, none of us were ever like, oh, that's not my job. It was 3 of us basically running the company. And So I think that really served us well. And I think when people flew in, they could tell that we really cared. We were very passionate. We were very honest. I think one of the things we got a lot was, I like your energy, and I like that I can trust you guys, and I'm willing to roll the dice. And basically everyone was like, I'm willing to roll the dice with you guys. And if you remember, that was like right as the economy was coming down, in 2007, and people were looking to have their own, stability, their own job, and customer services. You could create your own income. So yeah, I think those were the things that we did well that helped us overcome some of those deficits, which was experience. The business hadn't been around long. We didn't really know anything about carpet cleaning. We had a lot of things going against us, but I think those things that we did well offset our shortcomings.
And so being young and full of energy, and then of course the three of you bouncing ideas and pivoting quickly is huge. But just what about like the basics, of business and carpet cleaning and these things? Like, did you have were there books and tapes? Were there courses? Was there seminars? Was there coaches? Like, or did you literally just kept trying and trying and trying until something finally stuck?
Yeah, I'm glad you brought that up. So we had a kind of a third partner that oversaw all the cleaning products, and they were basically just a chemical company in town that was able to format our idea and create the products. And then we could, we spent that year troubleshooting and saying, okay, this one takes a little bit too long to dry, this one leaves a stain, this one leaves an odor, and we were able to troubleshoot down. But we definitely, to your point, we had an expert in that field that was kind of our third party, I don't want to say partner because he wasn't a profit share. He would just when anything came to the chemicals, he was the one that was overseeing it on the products. We had a machine that we brought over from Europe. So he was definitely helping us on that side, and he was an expert in that field, and we were able to bounce all of our ideas, and he was able to execute on them.
That's awesome. Yeah. So not necessarily a partner, but definitely a mentor that
Right.
was in there and but also vested in your success.
And he had a lot of experience. He was probably a 20 or 30-year guy. So when people flew in and they saw the cleaning product and they saw the machine and he would do the demonstration, I mean, he definitely was very well versed in that whole side of the business.
Awesome. Awesome. And so is that business still going now, or do you still own some franchises, or what does that look like?
So it is, and I think it's still to this day, my buddy still runs it. He's crushing it. I think they're up over 1,000 units, and I think they've expanded internationally. I think it's still to this day is the fastest growing carpet cleaning franchise above Stanley Steamer and Chem Dry, and he's located here still in Lakewood, and he's done really, really well. I think for me, as I learned more about business, and I just realized my eyes got really opened as the economy was crashing, all the opportunity that was out there, and that's how I got into real estate. It's one of my other college teammates came to me in 2007, and at the time, I was 22. We were making pretty good money. I'd saved some money. And he said, hey, we're going to start buying foreclosures at the public trustee sale. Keep in mind, at this time I was 23 and I was living with my two best friends in a rental. I didn't even know what a foreclosure was. I didn't even really understand home ownership. I didn't know loans. I didn't know anything. But I understood opportunity. And when he said, we're going to buy foreclosures, people aren't able to pay their mortgage, we can show up with cash and buy these, and we can turn around and put paint and carpet, flip them. I was like, I'm interested. So I funded the first one in 2008, and we bought it for $56,000, right around there, and then we sold it like a couple, maybe 8 weeks later for 96, I believe, and then I was hooked on real estate.
Yeah, I don't see how you couldn't be if that was your first experience. Yeah, that's awesome.
This is back in the day when you could just put like paint and carpet and put it back on the market, and that's what we did.
Yeah, that's incredible. So
we live in a different world now. That's what we used to do.
That is true. All right, so that was 2008, and then so were you still doing the carpet cleaning on one side, and then you started doing more and more of the real estate on the other side with a different partner?
Yeah. So essentially, for 2008, I was just the capital. I invested the money that I had. I basically invested every dollar I had in my savings account, and we would sell a deal, we'd buy another one, and I would invest. And I was still working for Oxybrush at the time, selling franchises and running my other franchise. I didn't go full time, and I actually didn't go full time in real estate in 2014. So then what I did was, when I realized that we had raised some money from one institutional guy that really understood it, and he gave us a line of credit for basically $5 million that then went to $10 million. And I was able to connect other operators around the country. So I had a buddy in Vegas that was doing some flipping. He needed capital, and so we funded him. I had a buddy in LA. I had two buddies in Florida, and so we became like the capital for these guys to go to their public auctions. They would come with the cashier's checks, and then we were partners in that. So I was basically just the capital. I was kind of the connector, or just in between. I totally didn't even understand how to underwrite a deal. It was kind of like unknown to me, just this magical way that we like underwrote the deal. I didn't even understand underwriting. I didn't understand how they found them really. I just knew that if we had the capital and we showed up, we'd get them and we'd sell them, we'd make money. And that was really what I spent time focusing on. I didn't understand that other side of the business, just because I was still doing other things, So
Right.
I was just really focused on, hey, if we can find people that have access to these foreclosures, we can fund them, we can make more money. And that's kind of where I added value to my partnership back then.
That's crazy. So, it was like a whole different world back then, right? In 08, 09, 2010, 2011, you could kind of just fall over yourself and get heavily discounted properties,
right?
Slap some paint and carpet in there, and then turn around and make a profit. So certainly something you could have just fumbled through and made work. I feel like today is a little bit different. It's a little bit harder, more competitive, but what's that?
Yeah, back then I like to say, in a recession, and I think this was true even during COVID, when people get concerned and the stock market starts to tank and there's really bad, the news and all the energy is just negative, 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 people get afraid, then all the capital kind of dries up. And I think you even saw that. A bunch of banks, during the last 6 months have dried up. A lot of things have changed. And so people get scared and capital dries up. So then if you have the capital, that becomes the most important asset, and finding the deals is really easy. And then when the economy's going up and everyone's really bullish, the capital's easy and the deals become difficult to find. And that was definitely the case from 2008 to 12, is if you had capital, the deals were plentiful. People were trying to find the capital because every year people got a little bit more confident, but it was still, even during 10, 11, 12 in Denver, it was still very choppy. Denver didn't have the brand that it does now. It didn't have the migration. The data wasn't there to support Denver as one of the most rock solid places. People still were not sure if real estate was ever going to make a comeback. So we were fortunate enough that we had a couple people funding us that did believe in real estate, and we were able to capitalize off of that. But to your point, as Denver's grown and other markets have grown, capital has become much more accessible, and the deals and opportunity become much harder to find.
Yeah, that's a really interesting point. It definitely ebbs and flows, right? As one is easier, the other is harder, and then it kind of gets to a point where it flip-flops. That's a really interesting observation. And so I know you're flipping properties across the country, but really you were more the money guy, the money middleman, so to say. You weren't necessarily in there managing the contractors and all that type of stuff.
Not at all. I was not on the operations. I still, to that point, did not understand how to comp properties, how to really find them, how to underwrite them. I didn't understand how to do anything on the construction side. None of that. I just knew that if someone really knew their market and was in real estate and they needed money, that we would be a good solution for them. And I focused on that. And I just did it with people that I knew. I wasn't like, I didn't really have to, I don't want to say this the wrong way, but try very hard. It was just people within my network that I knew through basketball or through business that were in a market, were in real estate full time, and I trusted them. And I was like, hey, we have some capital, we could fund you. And that's kind of how that got done. And yeah, it was good. It was a win-win. I mean, we did really well, and I think they did well, and it was really good.
Yeah, and so you've mentioned this a few times. It seems like you're one of the traits of Terrance is being connected to people, staying connected with people. And so I know you did something, there was another job industry you went into, kind of in the middle there. So you did the carpet cleaning, right? You got your hand into the real estate investing. And then another thing that came up, which to me, I don't know much about, but it feels like it lends itself really well to the networking ability of Terrance. and so you became an NBA agent, correct?
Yeah, that's right.
So, so first off, how does one become an NBA agent when you're, flipping some cheap foreclosure properties and you're cleaning carpets?
That's
All of a
right.
sudden, it feels like that's, the complete other side of the world.
You have to check both of those boxes to get in the club.
Is that what
Uh,
it is?
how did that happen? So what's interesting about sports, and particularly NBA, this is before. So in 2017, the NBPA, so the Players Association, has their own union, and they actually changed the rules on how to become an agent, and you do have to take a test now. But prior to 2017, all you had to do was have a player that would sign with you. So if you had a client, you would just fill out paperwork and write a check to the union of $3,000 and you were an NBA agent. So, from playing college basketball, I got a chance to intern for the president of the Nuggets. This was from 2005 to 7. So right when I was, building Oxybrush, I was an intern and working with the Nuggets and saw them do a lot of things behind the scenes. And I was fortunate enough to several of my close friends playing basketball ended up playing in the NBA. And so I got a chance to see how the whole thing worked. And in 2008, basically a light bulb went off and said, these guys are being underserved, right? You have these, and at the time it was like older people managing these young guys coming out of college. They didn't really relate. And it was really just a transactional thing. It was like, hey, when you need help on your contract or your shoe deal, we'll step in and negotiate it for you. And then maybe we'll talk to you once a month or once every 2 months or when your contract comes due again. There wasn't really a relationship or a service aspect. And there was no, and this was back in 2007 and 8, there was none of this like leveraging who they were as an athlete into other opportunities. Now you see that all over the place with LeBron and all the, Tom Brady and all these guys are doing all these deals in tech, Steph Curry, all these guys are doing, they're leveraging their brand and who they are as an athlete into all these other opportunities in their market and even globally. That was not the case in 2007 and 8. And so I just felt like being, kind of thinking more like an entrepreneur, like there's these opportunities with these guys to do so many more things. And so I got into that in 2009 and in 2010, 11, it was full time. And 2011 to 2013, I was a full time sports agent and had a lot of fun, built a ton of relationships all around the country, traveled the world. It was just a great, it was a great experience being single and young and being around these guys. I got to see and do a lot of really interesting things that I think have helped put me in the position that I'm in now, prepare me for it. But yeah, it's wild. It's still even wild for me to say, but it is all true.
That's awesome. And so, again, back to the theme of Terrance being a networker or having a good network and being good at staying in contact with folks. After a little bit, you decided to settle down a little bit, right? And so you chose Denver to settle in. And then, how did you immerse yourself in the Denver community? Because I think this ties in really well with the networking ability and what Terrance does in that regard.
Yeah. So in 2014, I got engaged. My father-in-law gave me some really good advice and basically said, if you want to have a healthy marriage and a healthy family, you should find one thing that you're really passionate about, focus on it, and try and travel less. Because at the time when I was dating, I was traveling all over. Literally, could be in China, I'd be in Europe, I'd be in New York, and I was all over. So that was really good advice. I took it to heart. And so I moved. At the time, I had an office in Vegas, and I was living in LA, and I moved back to Denver. I still serviced some of my clients, but I basically said, hey, guys, I'm getting out of the sports industry. At the time, we maybe had 30 clients, 4 or 5 in the NBA. And I just was ready to really focus on being a husband and having a family and settling down. And I knew that there was money in real estate because at the time we were still flipping like 100 properties a year up from 2008 to 14. So I knew that there was money. And I looked at my partners and I was just like, if they're doing this and they understand how to do the whole process, I can do it. I think there was some fear early on that like I couldn't do it without them because they had done it so well and they made it look so easy. But I just said, I'm going to, and we were all really close friends, but we just kind of had different interests. And one of them wanted to do more like office stuff and land. One of the other guys was going into multifamily. And I was kind of like the lone sheep that was like, I don't even understand single family. So let me just start from ground zero and figure out how to like underwrite a property, how to acquire a property, how to flip how to do construction. And I was very just like, I know I've made money in it, but I've never actually done it. So let me figure that out. And I just was really intentional about, the one good thing, which I was sharing with you earlier, was I had one relationship with a lender in town, a hard money lender. And so I knew that I could fund the purchase because they had funded all of our purchases. Basically, if we were doing a flip in Denver, they funded it. So I knew that I had that. I had that relationship. But even them, I had to say, hey, listen, tell me your criteria. I didn't even know their criteria. So I basically had an uncomfortable conversation like, hey, I know our company's done hundreds of transactions with you, but tell me what the criteria is if I find a deal. Like, what does it need to look like? And so that was really humbling. We were friends, but it was still kind of like awkward because they're like, wait, shouldn't you know this? So there's definitely that voice in the back of my head that's like, hey, this is like the wrong question to be asking. This is gonna make me look bad, or all those thoughts definitely went through my head. So I had those conversations from lenders to realtors of just, my goal was to meet with one person, either an investor, a lender, or a realtor every single day, wholesaler. Back then there was a little bit less wholesaling, so it was basically realtors were the ones that I was trying to build relationships with, and then some wholesalers. And I would just try and understand, what are you looking for? Where do you see opportunity in the market? Tell me about the latest deals you've done. Tell me about some other investors you're working with. How do they do this? How do they do that? So I spent a couple months doing due diligence, and then I ended up buying a property. And in short, for that first year, like I have told you numerous times, I basically bought 8 properties and sold them, and I think I made maybe $5,000, virtually no money. I just didn't understand the parts of the city to buy, or how much was too much construction, or what was over doing too nice of a remodel in the wrong area or the wrong part of the street. I even had some high-end ones. I think one of them I was trying to sell for like $700,000, which was insane back in 2014. So just a lot of learning, a lot of failure, and that was it. I think the one good thing I had was I was still, I was just engaged, but I still had margin in my life. I wasn't like all in, and I still had money that I'd saved and had some things. But yeah, it was really tough. It was very difficult. And then I took that into 2015. So by the end of 2014, I had like the confidence though, like, okay, I know what to look for now. I know the price range I need to have. I know how to structure things with a contractor. My Spanish started to pick up again from my childhood, so I started to realize that I had a niche with getting Hispanic contractors. And so I was building, even though I was losing and not winning, I was getting confidence that, hey, I won't make this mistake again. I won't make this mistake again. I won't buy in this neighborhood. I won't buy this price point. I won't buy from this person, type thing. So I was every deal, I was getting more and more confidence, to where by 2015, I was confident enough that I brought in, and the other thing I think, Justin, that was important was I was self-aware enough to realize that I could find deals, I could fund them, but I needed someone else to help me with the bookkeeping, managing the budgets, handling the bank account, all the minutia that came along with construction. I just could not do. I needed someone to help me with that. So I approached one of my other college teammates, who was at the time working on Wall Street as he was an analyst. He was a bond analyst. So we're saying he was a nerd. He was really good with numbers, and so I knew that was a good.
Oh.
And so that's kind of.
Terrence, you're freezing up on me.
Oh no. How about now?
No. I think we're okay.
Oh, sorry.
All right. No, it's just
I was probably talking too
much
fast.
energy in this story that.
Yeah.
All right. So that's awesome, and that's huge, and I think there's a lot to be said for everything you had done leading up to that, right? That allowed you, like you said, to try all these deals and not necessarily make money, but to be, growing the experience and the confidence. I mean, that's huge. I want to go back to what you were saying about basically every day you're meeting somebody new, but you wanted to be growing that relationship. You didn't just want to sit down and have coffee for an hour. You then wanted to form a relationship with this person.
Right.
So I think it's pretty easy in the real estate world for us all to be able to go out and have one coffee every day between real estate agents and wholesalers and mortgage brokers and stuff. But what were you doing to continue that relationship?
Yeah.
Because at first it sounds daunting. If you take a step back and be like, well, it's only 365 people by the end of the year, but that's still 365 relationships I have to be nurturing. Is that like an every day, every week, every month?
Yeah, that's excellent insight. So one of the things that I focused on was when I would meet with someone right away, when you meet with someone, you can tell, is this person going to be able to bring me a deal or add value or do anything, or is this going to, or not, and so sometimes you just say, hey, this just isn't the right fit. Maybe they're working on office buildings, or maybe they're not into flipping, or maybe they don't want to work with investors. So you kind of go through and you have a conversation, and then you figure out, okay, this is someone. And I think, what the most important thing is, you need to realize when you come across someone that is valuable. And when I would come across those people, I think what I was able to do, at a high level was I would stay in touch with them, and I was very intentional about my communication. So for instance, if I was meeting with a wholesaler or a broker and I was like, this person's really talented, they don't work with a lot of other people, but they understand one segment of the city, or they have kind of an advantage in an area, I would basically follow up with an email. And these are all just fundamental things, but I would follow up with an email and just say, hey, I really appreciate it. Here's my criteria. Here's what I'm looking for. And here's a proof of funds. That way they knew I had the capital, or a letter from a lender, like yourself. They knew I had the capital. They knew I knew what I was looking for, and they knew that I was going to follow through. And then I would just, I would try and follow up with them every week, every 2 weeks, without being like annoying, but just say, hey, what have you seen? Or send me deals. And then they would start to send me deals, and then we'd just have a conversation of like, here's, and I would just say, here's why this one didn't work. I need something with less rehab, or I need something in this zip code, or, and then we would get down to where we would do deals, and then we would do, more deals. And, you just try to build, try and build on those conversations. Just being able to identify someone that does fit what you're looking for, and then follow up immediately, and then have, a criteria, so that way that person can take you seriously, and a proof of funds showing them that you are ready. And those were the things that I was able to do, and then just continue to be consistent in that.
Yeah. So for folks, listening at home, first off, networking is basically free, or probably the closest thing we do to free, right? I mean, it's the cost of coffee and your cell phone to be making calls or emails. But so, I mean, first off, great way to be growing your network, to be growing your lead sources, all these things. It's very attainable. But something that really stuck out to me for what you just said was you had your criteria. You're able to say, well, bring me a good deal, right? Because for what does that mean?
Right.
What is a deal? And so, what's a deal to me and what's a deal to you, Terrence, are completely different.
Right.
But we both know what deals are to ourselves, right? And so we can sit here and have a conversation about what I'm looking for, and I can add value when I'm hearing what's good for you. You can add value when you hear something that works for me. Back and forth, these types of things. And that's the direction that real estate agents or wholesalers need, right? I mean, I think we're all on, a couple wholesale lists, and they send you 30 deals a day, right? Like, how do I know? How do I have time to sort through all this stuff? I have to know what's good for me, and then I want to build that relationship with those people to say, don't send me 30 a day, send me one a week, but this is the deal, and I will move right away. And having all that stuff being pre-approved and showing that proof of funds, right? I'm serious. I can do this. I have this track record. Now, sometimes you don't have that up front, but showing it and performing. When they say, okay, Terrence, I got the one for you. It hits all your criteria. It's in the price point you're approved for. What do you think? And it's just, yes, let's go. Let's do it.
Yeah.
Absolutely. That's huge.
Yeah.
That's huge. And so, if there's one big takeaway, for the folks listening, I would probably say it's that. Have your criteria. Be ready to move. When you're talking to anybody, even if you're just going to the next RIA meeting, whether it's on Zoom or in person these days, don't just say, oh, I'm looking for a deal, in Denver. Like, know exactly what you're looking for and tell people. Don't be ashamed to tell people what you're looking for, because that's how people want to add value and help and give, but they don't know what to do and how to help unless you tell them. So
yeah,
that's huge, man.
Yeah, I think 100%. You nailed it. I think that one of the things that comes to mind, something I'm really passionate about is just empathy. You know, you have to put yourself in the other person's position. You know, like you're a lender. You know, if I'm going to meet with you and I'm going to ask you questions, and I'm going to say, hey, Justin, will you fund this? Will you fund this? And then all of a sudden, you know, I find the deal and then I go to someone else. You know, it's like you know, if you're looking for something and you're meeting with someone, you have to have empathy and you have to put yourself in their position. And if you do that and they feel that, I feel like you're going to get disproportionate value back from them. And so, you know, when you meet with a realtor or a wholesaler and you outline what you're looking for, and then you have conversations, and then they send you a deal that checks all your boxes, and then you don't take initiative and don't pull the trigger, then, you know, they've just wasted, they're 100% commission. I'm guessing you're 100% commission. You've just wasted how many weeks and hours of their time, and they're just not going to take you seriously. And so I think that you have to put yourself in their position, understand where they're coming from, and be really serious about that. And I think because of myself putting, you know, being able to do that and understand that and think from their perspective, it's been able to generate the kind of relationships that now send me, you know, a ton of deals, you know, this many years later, because they know, you know, because I've been able to just do those fundamental things with those relationships. So I think that's really important. And I just think as human beings, we can feed off of that. And so we're more motivated to work with people and to give people disproportionate value when we feel like they have our back and they understand the shoes that we're sitting in.
Yeah, 100%, right? You gotta put yourself in their shoes, right? And see what they want and what they're trying to do, and understand where they're coming from, 100%. And so you spent this first year really diving into these relationships. You were doing deals, falling very flat, it seemed like. And so why, after a year, did you want to keep going with this?
I felt like I was getting closer. I felt like I was getting closer to be able to crack the code and solve the equation. You know, I just felt like every single time, you know, I sold a property, I was getting a clearer picture of what it needed to look like, the things that I could do better, the kind of deals I needed to look for, and I was kind of sharpening, you know, my pencil. You know, I was just getting closer, you know, to hitting the bullseye every single one. You know, I think that was the key. Is, you know, on one, maybe I made 20,000. I was like, oh man, I got it. And then the next one I'd lose 15, and I'd be like, okay, I can't do that again. Okay, let me go back to this. You know, just constantly tweaking it, tinkering with it, and just getting down to, okay, this is the way it needs to look. And, you know, even to this day, you know, I still make mistakes, and obviously losing is less likely with the, you know, with the experience and the kind of the business that we're in. But it's still, you know, I still have to apply those same fundamentals and still have to constantly be tweaking, okay, and saying, hey, this wasn't a good use of time, that we didn't get as good of a return in this neighborhood or in this building as we did this unit count, you know. So I'm still doing the same thing today. The numbers have just changed, and obviously the asset class has changed a little bit, but the same, you know, that same voice and that same drive of like, hey, we can get this better, we can do better next time. This is something that we can easily fix. It's within my control to do this better, you know. And I think that's what kept me going, was that I feel like I can grasp, I could just, you know, it's like you can see the finish line. It's like, I can do that, you know. It felt attainable.
Yeah, I love that. So for me, on my first deal, I wound up losing about 10,000, and that was 10,000 I did not have to lose. But similarly, I fell in love with the process, right? I thought I would love it, and then I did it, and I did fall in love with the process. But then it was like, okay, but you lost money, so this is not sustainable. So what did we do? What did we not do? How do we screw this up? And let's go do it again, but do it better. And I love that, like failing forward, you know, type of a thing.
Yeah.
And so then you progress, and now we're doing more deals, making more money, right? Growing these relationships. But you're still playing in the single family world.
Mm-hmm.
But these days, and obviously we're jumping up several years, but now you're in the multifamily world. And so I want to hear a little bit about that. What made you want to transition from the single family stuff to the multifamily stuff? What happened there that made you want to change?
So, you know, as we talked about, back in 2008, you could just buy a property, put paint and carpet, and then sell it 3 or 4 weeks later. And it was pretty simple. You know, in 2016, 17, 18, when we were doing these flips, we were spending a lot of time, a lot of energy managing construction. You know, you got to the point where you had to do full renovations, sometimes reconfigure the layout, add bathrooms, bedrooms. I mean, it's a totally different game than back in the day. And so that gets exhausting. So at one time we'd have 10, 12, 13 projects going, all these different construction crews. And obviously anyone that's done construction knows all it is solving problems all day. It's just fire after fire after fire, one issue, another issue, so that gets exhausting. And so by 2017, 18, I just started to look at it and say, there's kind of a ceiling with how many flips you can do and your time. You only have so many hours in a day. And so I stumbled upon a couple of duplexes and fourplexes in 2016, just from building relationships. And those ended up being the best deals I had done to date. Basically realizing that if I could buy basically 4 flips in one address and have to manage one crew in one area, but get 4 times the return, well, that's a pretty good, that seems like a good solution. And then understanding, and then as I did that, and then the next time I did a duplex, I understood that people looked at income, and I started to think about, okay, so every time I update a kitchen and a bathroom, I get X number of dollars in rent. And then I started to realize that, okay, at a 6% cap rate, every $100 I can raise rent. That's like $20,000 on the back end, and started just to like stumble upon, hey, different aha moments every step of the way, to where I got to the point of basically saying, every hour I spend on single family is taking away an hour that I could be spending on multifamily, where I get X return on my time and my money. That's just not a good, there's a better use of time. And that's really where it was. And so now I look at apartments as like, if I buy a 20-unit apartment complex, it's like I'm doing 20 little flips, but in the same area with one crew, and I can do them one at a time, while people are still paying me rent. And so it just, I still love the flip. I've probably done 2 or 3 flips this year in Denver, and so I still do it, just because those relationships I've built, we have the construction, we have the infrastructure in place. But my core, I don't spend any time on it. I spend my time on the multifamily side, just because, first of all, I love the idea of people paying, even when I'm sleeping or not working. I think that that's something that we're all looking for, and so I just fell in love with the idea of like cash flow and that. Just the pursuit of just continually growing that cash flow base and the freedom that gets me, and something that you and I have talked a lot about, spending more time with our families and traveling. So that was kind of that, the light bulb just went off, and then I've just continually been on this pursuit of just getting better every deal, of just trying to narrow in on how do we get better at our budgets, how do we get better at understanding rents, how do we get better at underwriting properties on the front end, how do we get better debt, there's just so many things to unpack and ways to improve. And I'm just, somewhere in that journey.
That's awesome.
Yeah.
And so what are you doing these days? So like, what does your business look like? So we're focusing on multifamilies, right? Yeah. We're focusing on value add. I mean, it's the name of your company, but are we doing fix and flips? Are you buying, improving and then selling all these buildings? Are you keeping them as rentals in your own portfolio, mix of everything?
Yeah.
What does that look like?
So in 2016, I started buying rental properties in Des Moines, Iowa with my dad. So we had done the carpet cleaning before, my dad, my brother and I loved it. It was a great experience. And so, when I got into real estate, I always wanted to do something with him in Des Moines. I just felt like Des Moines was a great market. It was very stable, and I was looking for another excuse to go home and visit my friends and family. So we started buying rentals. We were buying houses in Des Moines for like 30, 40, 50,000, and we were renting them for 1,000. And I was like, oh, this is insane. So I'd take them down. We had a line of credit. So we'd take them down with our line of credit. We just do the BRRRR method, really simple. And we would do that and take out the cash and do it again. And then as I built more relationships in Des Moines and I started to get to know the market better, we bought our first large purchase was a 42-unit extended stay motel, and it was completely trashed and disgusting. But again, it was just kind of like we're doing 42 little flips in one area. So I was like, oh, this is going to be killer. So we did that. And then we started to grow our reputation, our relationships in Des Moines. And now we have.
What did you do with that building? Did you sell that building?
We still have it. Yeah, it's one of the
Okay, you held it.
I bought 42 units and a half acre, and it came with a restaurant, a bar. And I bought it for $1 million. And then, so it's basically like 20 a door, something like that.
Uh-huh.
And then those rent to this day for between $800 and $1,200 a month. So it's maybe one of the best cash on cash deals I've ever done. I think we ran the number, it was like a 20 cap or something like that. And it was nothing special. It was just no one else wanted to buy it. I was just like stupid. I'd be like, oh yeah, we can do that. I didn't understand the management, but we learned, we figured it out how to do it. So in Des Moines, we currently have 350 doors, mostly large apartments. We have maybe 40 single family rentals. The rest are apartments. My brother and my dad, we have a management team there. We manage all of them ourselves, and that's been great. Same kind of structure. We buy outdated, undervalued buildings. We come in there, renovate one by one, raise the rents, stabilize it, add amenities, and try and make buildings, communities that we would want to live in. Basically, that's kind of my perspective on it. Let's build a place and renovate a place that we would want to live in, and we would feel good, it's safe and comfortable. And so that's in Des Moines. So that's just stable, long-term. We have long-term debt on it. And we're looking to grow there every year. We're trying to buy maybe another large apartment building to add to that portfolio. But it's been good. It's stabilized. It's been, I started that, just for everyone to, your listeners, I started that in 2016. I did not take a dollar. I just started paying myself from the cash flow this year. So 4 years, but it's been the best investment I've ever made. I would say on my time, I'll be able to pay myself for the, most likely the rest of my life. Now that the whole portfolio is stabilized, we're like maybe 98% occupancy, and it's been the best, the best decision I made. I didn't pay obviously it was delayed gratification. I had to be really patient. A lot of trips to Des Moines, so many issues. We went through 2 or 3 property managers, so many failures again. But in the end, it's been I think, and I've said it to a lot of people, the best decision I made was just buying something that we were going to hold, stabilize, and just looking at it like, I'm not even going to touch that. I'm just going to keep investing in that portfolio. So yeah, so that's been really good. And then in Denver, so then that's one part of the business in Des Moines. And then in Denver, we buy the same thing. We're buying multifamily projects, but smaller. And in Denver, it's a lot harder to find a 100-unit building. So we're buying anything from duplexes, fourplexes, 20, 30 unit, 40 unit buildings. And we'll do the same thing. We'll buy them, renovate, but we'll sell a little bit shorter, just because Denver, we're able to sell it basically like between a 5 and a 6 cap. And so the decision I made was, if I'm not willing to sell it at a 5 cap, it means I'm basically buying it at a 5 cap. And based on where I'm at in my career, I just feel like we can do more with the capital, turning it over. So Denver is more of an income generating, we'll buy it, renovate, and then in a year or 2 we'll sell it. And in Des Moines, it's much more long-term, stable, and much more boring business model, just slow and steady in Des Moines. But that's basically our business model. We're buying apartments in Denver, and we're turning them more aggressively, and then we're selling them once we've stabilized it. And basically the value we're providing there is to an owner. We're handing him the keys turnkey. So brand new leases, all the CapEx has been taken care of. We'll solve all the major problems in the building and then turn it over to a new owner.
Awesome.
Yeah.
Awesome. That's it. You brought something up though that was really interesting. So you guys manage the properties yourselves.
Yeah.
And so 350 doors, that's a medium-sized property management business, and that's just your own portfolio. So first off, do you manage anybody else's portfolios and properties as well, or is it just your own?
Yeah, we just manage our own. We didn't want the liability of managing other people's properties. Property management is very difficult. Anyone that's been in it, it's, I like to say, everyone wants to say they're a real estate investor. No one wants to be in property management. I mean, it's very, very difficult. But when you have your own capital in a property, no one's going to take care of that property like you will if you own it and it's your capital and your name on the loan and all those things. And so what I realized just from losing a lot of money from having other people manage my properties is that if I want to be the best investor I can be, I have to be one to manage our own properties. And that's been really difficult. A lot of learning lessons, a lot of pain points, but thankfully 4 years later, we've been able to slowly but surely, get better every year, improve on the process, improve the systems. And I think, honestly, I'm really proud of what we've built there. My brother and my dad have crushed it. I think we have the best property management company in Des Moines. I mean, my brother's done a really, really good job of taking care of tenants. We're really high on renewals. The maintenance process is done really well. We've really improved the process of underwriting tenants and how we are able to identify the right tenants for our properties. And so really proud of what we've done there. I think if you want to get into multifamily, the best way to learn it is to manage your own properties, starting out. That is the best crash course. And I think you've done that. I mean, I think it's the best crash course and what it looks like to be a landlord and to own properties is if you're the one dealing with the maintenance calls, you're the one dealing with the evictions, doing all of the really difficult things that come along with owning property. I just highly, highly recommend that for anybody, starting out.
Yeah, I agree 100%. It's not easy at all. But, what better way for you to then manage the property manager is if you've done it yourself and you understand what what goes into that, right? Or what doesn't go into it, For me, when I made the transition to a property manager, it was because I was able to step back and have conversations with other investors and just look at the cash flow and the quality of the properties and all these things. Like, I'm doing a bad job. I am not a good property manager.
Right.
Whereas you, it sounds like it was more the opposite. I've hired all these property managers. They've done a terrible job. Here's how I can do it better. And so somewhat similar path. But I want to hear more about that. So what kind of issues did you run into trying out these property managers? Because as we're both agreeing, property management is incredibly difficult, not easy, not fun. But you decided to start your own company. So what drove you to do that?
I was just losing so much money. I mean, I remember we had 100 doors in 2017, and I think he deposited maybe like $18,000 that month or something. And I was like, what? And we were, I would say we had 80 some tenants. And I remember just flying back to Des Moines, and then the next month, I think maybe he deposited like 9. I mean, after so many months of it, I was just like, I'm being a terrible investor right now if I let this continue to go on. It's just pure negligence, and I think what I realized, and this has happened several times, but not to that extent. But what I've realized is that, property managers, they're running their own business. Our interests aren't fully aligned. If there's a vacancy, they want vacancy because they get half the lease up, right? As an investor, the number one killer of my return is vacancy, right? So even if I have to negotiate or lower the rent or do an extended payment and then the other thing is, as they want the lease up fee, they're going to be more flexible on who they allow in because they just want a lease signed so that they can then move on to another project. The other thing that I realized was that on maintenance calls, they just want to put out the fire and satisfy the tenant. They're not necessarily looking at what's the most efficient and cost-effective way of solving that maintenance issue, right? And so what I realized was that we were paying way too much for maintenance. We were letting in the wrong tenants that weren't paying, and there was way too much vacancy every month so that he could then get the lease up fees, among other. But those were the three, I think, that stood out the most. Is just the misalignment of interest and just realizing that if I really want to build a large portfolio, which I did, once this light bulb went off of, you can get debt for this cheap and you can lock it in for this many years, and then all of a sudden it just becomes about collecting rent and raising rent and keeping units full. The light bulb goes off and it's like, hey, if I just do a good job of keeping these units stabilized, I can build some solid cash flow. And so that became my driving, the driving force. And so I was just really focused on that. And I just realized that the best way to do that with the least amount of risk and aligning our interests was to bring in and do it myself. And that's what I set out to do. And it was a 3-year journey to do that, but we have done it and we are doing it. And it's been very gratifying, but it's very, very difficult, very challenging.
Yeah, so 3 years. Now, obviously, you have 350 doors. So did you just take over like one building at a time or a couple single families and start practicing, so to say, and ramp it up and learning and figuring it out? And then just over time, you've fired your property manager more and more and brought more in-house?
Yeah, so because I was doing it in Denver and we had done our own leasing in Denver and we'd done our own property management, because again, we had done duplexes and fourplexes, so I kind of knew what it took. No, I just said, the last month we're going to do this is November. We're taking over December, and we're going to figure this out. And then between my dad, my brother, and I, we just slowly built. But we took everything over day one, and we were just like, we're going to solve this, and we're going to, So maybe not the most efficient way, but because I was full time, I could do that. And I just, we just decided that was what we needed to do. So I interviewed some other property managers, and I just kind of realized that no one was going to care. And I think one of the things I realized, and this is to points to investing out of state, is that what I realized was that in smaller markets like Des Moines, you don't have the sophistication and the optionality like you do in Denver. In Denver, there's probably 4 or 5 companies that do it really, really well. They're national companies. I mean, they just have the infrastructure, they have the back office, they have the leasing, they have the experience, they have the market knowledge to do a really, really good job. Whereas in Des Moines, there's maybe 2 or 3 companies that dominate the market, and everyone just kind of settles with, we're going to go with them. And so what you find is that as you get into smaller markets, the cap rates go up, the management also, get less sophisticated and harder to find managers that are going to really, make you a priority. And so those are some of the lessons that I learned. And I just realized that if I was going to do this in Des Moines long term, I was going to have to do it myself. That no manager there was going to really take care, because I was still a small fish. Even 300 doors. Some of these guys have 3,000 or 4,000 doors. So why are they going to make me a priority? And so it was an eye-opening experience and something that I needed to do. And I'm glad that I went through it. It's really made me much more aware. When I'm when I've had opportunities to invest out of state, that's been something I've remembered and learned, because things can look really attractive on paper. Obviously, I'm sure you've seen it. These cap rates can look unbelievable in these small markets, but it's like, okay, who's going to manage it? Who's going to collect the rent? Who's going to handle maintenance? All these things that don't seem to hit the spreadsheet.
Yeah, exactly. It's the intangibles of real estate.
That's right.
That is where the risk is and everything, and because it's not there in the spreadsheet, right? It's often overlooked, especially from newer investors who are just chasing, whatever return that they're chasing. They don't see it, they don't understand it, they haven't, they don't have the blood, sweat, and tears into it.
That's right. Yeah.
Yeah. Awesome. Well, Terrance, our hour together is quickly coming to an end. What did I not ask you that you were hoping I would ask?
No, I thought we covered some really good things. I think the punchline for me is that I was able to realize, and it's helped me make better decisions over time, and just what were the things that I really enjoyed and I was best at. What's the highest and best use of my time? And I think everybody, no matter what we're in real estate, we all have things. There's things that you do better than me, and so there's things that you should spend your time doing that I shouldn't, and vice versa. And I think that the sooner you realize that, what are those 2 or 3 things that I do better than most, and that I need to spend my time on, and then how do I find people that do the other things that I'm not good at, and let me surround myself with them. And so I'm thankful that I was able to realize that really early on, and then I've been able to make decisions based on that. Like, hey, I'm good at these 2 or 3 things. Let me focus on that and double down there, and let me surround myself with people that do other things really well that I'm not. And I just think that that's a foundational piece to making decisions, whether in real estate or anything in business. So
I love it. I think that's a perfect place to end it. And you added an interesting twist, which I would love. Not just find the highest and best use of your time, but basically the highest and best use of or the thing you enjoy the most.
Yeah.
That one you're good at, you get the most value out of, and value probably means multiple things, right? Monetary as well as enjoyment, fulfillment. So that's huge. I love it, and I think that's an awesome place to end. Well, Terrance, thank you so much for coming and joining and hanging out. It's been awesome getting to know you and hearing more about your journey. And I can't wait to see you again. Hopefully, we'll share a drink together face to face sometime in the future. And really appreciate the time and sharing your story with us. Thank you.
Yeah, thanks for having me.
Oh, Terrance, if it's okay, is it all right if people reach out to you? And if so, what would be the best way for someone to do that?
Yeah, absolutely. Yeah, they can go to our website. It's I can put it in the chat, but it's TheVAREco.com, TheVAREco.com, stands for Value Add Real Estate Company. You can go there and email me, or I'm on Instagram or LinkedIn at Terence Doyle. And if anyone's interested and wants to see kind of how we put deals together and what things look like on the multifamily side, I'm happy to send them our latest deal kind of structure and how we did it and how we underwrote it. And it kind of tells the story of a transaction we recently did in Denver, just for people to learn if they're interested in multifamily. So happy to share that with anyone that wants it, kind of give them a peek behind the curtain at the multifamily world. If they just send me an email or a DM on Instagram, I'm happy to send that to them. So yeah, happy to talk to anybody. Always love chatting about real estate and business.
I love it. Terrance, thank you so much. Appreciate the time. And everyone else, we'll see you next month on the Pine Financial webinar.
Thanks, Justin.